Before we get to this week's episode, I want to take a second and highlight what we've been working on over at Schaeffer's. You've no doubt heard of the popular sell in May and go away trend. Well, as contrarians, we recently identified 5 stocks that are poised to buck that trend and enjoy strong growth this summer. It's only available for a limited time, so head over to the link in this episode's bio to get the free report. Can confirm, folks, I did say free. Check it out. Without further ado, ladies and gentlemen, welcome back to the Schaeffer's Market Mashup. I'm back from vacation, refreshed as ever, stoked for this week's episode. Please welcome back Jermal Chandler, now an on-air talent at Tastytrade.com. And a Lego enthusiast, as I had just found out. Jermal, what's happening?
Man, building Legos every now and again, but in between that, I managed to do a little bit of work, checking out markets, man. It's good to talk to you again, man. It's been a minute.
Yeah, so I looked back through the archives. We last spoke in September. It's a very different world in those last, 8 months? Honestly, it feels like 2 years, but geez, we've got election, vaccines, recovery, a psych recovery, inflation, everything. We'll unpack all of that shortly, but first I do want to clear something up with you. In our emails leading up to this episode, you said you're not an Atlanta sports fan anymore? Because I had all these Trae Young, Julio Jones, things to take on you. So you turned your back on your childhood team here? What's going on?
So the thing is like I moved around a good bit as a kid. So I grew up in Miami, and that's kind of where the roots started. As far as teams, there's teams that I'm never going to be able to shake, and that's the Dolphins, and that's my Miami Hurricanes. Now, I did not go to University of Miami, but that's just, when you grow up, especially when you're growing up, when I grew up there, that was the squad, man. So those are the main 2 teams. I went to college in Atlanta and, definitely got love for Atlanta. They got some cool young guns these days. Like you mentioned, Trae Young and Julio. We'll see how long Julio's there.
Yeah.
But I've moved around a good bit ever since, and we can touch on a couple of sports teams in a little bit. But Chicago is home, and that's what it is. So when it comes to the majority of the teams, a lot of them are going to be emanating from Chicago.
Okay, that makes a lot more sense. Full-on Chicago convert. I get it. You're eating deep dish casserole. I'll leave you be there. So you've got a new role over there at Tasty. Tony is an icon over there for sure. Frequent guest with us. What makes their options trading mechanics different?
You're right. Thank you for the congrats. I do have a new role that I'll touch on. I've been in this business for 15 years. For the past 3, I've been lucky enough to talk to everyday people about options trading and how they can become self-directed investors. And, of course, we saw a huge shift in retail trading last year. My good buddy at SIBO, Henry Schwartz, has done a lot of work showing this. A lot of his charts showing one-lot trades, odd-lot trades. The retail movement has been undeniable. So if you're going to inform the retail crowd about options trading, then why not do it with the best? So I called up Tom Sosnoff, who's a giant in the field. He's also a friend. He and the brain trust at Tastytrade are the creators of that often used Thinkorswim platform. And they started Tasty in 2011. And Tastytrade is a financial media network for options and futures trading, unlike no other, for those who are unfamiliar with it. So I said, look, Tommy, here's what you're going to do. I'm just kidding. I basically begged dude for a job because it's such a cool company. We got like 8 hours of programming every day, Monday to Friday. Just, great people with so much knowledge from the industry, several shows, tons of different content on options trading and talking to people about break evens and the best way to manage, their self-directed portfolio. But more importantly, all of this is with side of personality. So the aim eventually is just, to help people understand the esoteric nature of options and futures with easy to follow trading mechanics in a non-intimidating way. And some of those concepts that make us different and separate us are, trade small, trade often. We're largely talking to people about how to sell premium and the correct way to do that. Using the law of large numbers to take advantage of multiple occurrences. Markets, just helping them understand the idea that markets are random. So it's pretty difficult to be directional. And I certainly have, spent plenty of years of my trading career at a prop firm. Times we were directional with the movement in the stock, or whether we were directional with volatility. But we're just trying to help people understand it's hard to be directional. So you want to try and be product indifferent when you're selling volatility, and you want to avoid illiquid underlyings. You want to trade those monthly expirations as opposed to weeklies. Again, getting to this idea of liquidity, trading liquid options and stocks so you can get in and out relatively easily and seamlessly. You want to try and manage trades, especially those that are winning trades. Close out a trade if you're winning 50. I mean, that's a huge win if you can do things like that. And then finally, like managing trades mechanically as opposed to emotionally, right? When something's going against you, trying to find ways to manage that mechanically and using research that we have that shows different ways to manage those type of trades. So, just things like that. And we also have, a volatility rank that we use across time periods. So across a year's period to check and see if volatility is elevated or cheap. That's our IV rank model for that. And, we use guidelines to help determine those optimal times to allocate capital based on overall market volatility environment. So for example, like if the VIX is anywhere between 15 and 20, then you're probably like 30% in with your capital allocation as opposed to all the way in, because you want to wait for better opportunities when volatility is higher. And so you use like the VIX for that type of thing. So I'd say that's what makes us different.
Yeah, I mean, from afar, you guys are one of the most hardworking, units in the industry with the content that you put out. It's unique, like you said, it's personality driven, but then again, you guys have your own metrics and your own scorecards really that set you apart. So, I mean, everything you guys do, I try to gobble it up as quickly as possible. So, I mean, when we found out that you had joined there, I think Katie and I had said like, wow, that's, like a match made in heaven. So, it's great to see, you guys putting out just outstanding content. But I do want to pivot back into September and jump right in. We talked about COVID's impact on oil, restaurants, retail, real estate. We hit everything. 8 months later, how are those sectors faring? And then ahead of what's looking like to be an amazing summer for reopening, what do you have your eye on going forward?
Yeah, you're right. It's looking like an amazing summer for reopening for sure. I mean, honestly, it does feel like you said, you talked about time now, and it's so weird. We talk about like last year, or you talk about something that happened 2 years ago. You often have to realize, no, that actually happened 3 years ago. But in our case, speaking of September, oddly enough, I'll let you in a little secret. I did our show last September, just days after me and family had COVID in the house. So that was kind of wild.
Wow.
It was kind of rough. It hit me the hardest. Everybody else was kind of okay. My kids and my wife were, kind of had mild symptoms, but hit me the hardest. So that was interesting. But, lots changed since then. Like you said, I mean, we're all fully vaccinated now, so that's kind of nice. But yeah, I mean, a whole lot has changed. I mean, in September 2020, COVID cases were rising, including mine. We had, equity markets, particularly the NASDAQ, and volatility rising at the same time, which is typically a sign of a near-term top. And it was. We saw that big move down like after like September 2nd, I think it was last year. So things were crazy, right? Today, honestly, I haven't focused on the traditional sectors as much. I mean, the sectors were a big deal at that time due to the anticipated sector rotation that we usually see around elections. And we saw a big sector rotation like in November and December and January. Now I'm watching data and signals that kind of determine their effects on the overall market volatility. So like right now, we've got this red hot housing market, right?
Yes.
New home sales cooled a little bit in April, but the housing market is crazy. I'm sure you've noticed that. Mm-hmm. And it's hard not to notice commodities. My goodness. I mean, there's been a surge in demand for a ton of materials that's basically in some cases led to shortages. I mean, we got copper that's trading, over 10, and we got iron ore, we got corn, wheat, soybeans, coffee,
lumber.
You're right, dude. You're like right on with me. Like lumber. Oh my goodness. Which of course is bleeding into the housing market, right? Like, I mean, I saw something the other day, 2x4 in Wisconsin. I mean, they're selling them for like $12 and they used to be like $1. I mean, if that doesn't get to the word we're going to get to in a second, I don't know what does. But, you know, semiconductors, which is bleeding into the auto sector because of all the semiconductors they use in with cars and whatnot, plastic and cardboard packaging. So like every commodity is just on full tilt right now. We see travel demand return in a big way. I mean, how about this for TSA numbers? Like for this month already, for average for 2021, we have 1.5 million people screening through TSA versus 200,000 for the same time last year. Versus 2.4 million for 2019. So we're not quite at 2019 numbers yet, but we're way above where we were a year ago. And we're seeing restaurant capacity increases. Oil consumption is back, man. I mean, oil, we know what happened with oil last year. And so we see oil now trading back in the 60 plus range. So much of this, of course, is due to the high rate of vaccinations. And of course, it's leading to inflation. Inflation. So, yeah, I mean, that's basically what I'm watching more than anything.
Were you nervous you were going to spell that right there?
I was a little bit nervous. I had to check. I had dictionary.com right next to me just to make sure. But, yeah, I was doing a little Aaron Rodgers thing right there. You know what I'm saying? RELAX.
Yeah. Well, I mean, should we relax about inflation? This is deviating a little bit from what we wanted to talk about, but what do you got for me there?
I mean, they keep saying it's transitory, right?
Yes, and that's what Clarita said yesterday.
Yeah, right. And I mean, we there's been a ton of jokes about that. I'm a huge Twitter guy. I'm on Twitter quite a bit, and people are showing all kind of charts with things busting out through the top of those charts and saying, "Don't worry, it's transitory." And it to some degree, I mean, you would think it's true, right? I mean, everything was certainly transitory last year when we went into lockdown mode and everybody was hoarding things. That was a transitory thing. You would imagine there's going to be a rush to everything. Everything's going to be happening at once. Everybody, I mean, I don't know about you, but how many, peer gatherings are you starting to get invited to? You're starting to hear about things. Everybody's doing something. So I feel like I'm going to be different and say, yeah, I do think it's kind of transitory. I don't know how long the transition will be. And I think that's the key, right? But I think it's transitory.
Yeah, I've had this May has been incredible with the amount of link ups I've had with people because we have group text going around like you get your second shot, you 2 weeks after, boom, okay, let's all go. And I think that's not just limited to my own social circle, that is widespread.
I would agree.
And so I mentioned Clarita's remarks. I do want to run back to or stay with the Fed for just a quick second. The asset purchases are continuing. How long do you think that can last before some tapering begins? We briefly touched on that, but I want to come back to it.
Yeah, I mean, the Fed continues to purchase securities at to the tune of $120 billion a month. I think those questions were already mounting about tapering after we saw these moves in commodities we talked about a little while ago. And then, we saw the recent Fed minutes where they kind of touched on that idea. And so that chorus continues to get louder. However, I don't think it's going to happen until late 2022 or 2023, according to the Fed's funds futures right now, and according to that CME Fed Watch tool, which goes out to December of this year. And there's no blip in sight going above a quarter on the rates. So, but, then you wonder, well, why? Well, I mean, the Fed continues to say that they want to see metrics of better employment. I mean, even though we have falling weekly jobless claims and we've seen encouraging non-farm payroll reports each month, although I think we kind of, dropped the ball a little bit for April, but those numbers have been encouraging. However, there's a ton of jobs and no workers. I mean, some places are literally doing paid incentives for interviews. So something doesn't add up there, right?
Yes.
And I did see data recently pointing to the fact that while high income and middle income jobs have returned, low-income jobs have not. So there's still some of this, the pandemic created inequality in a lot of different businesses and a lot of different sectors everywhere. And I think we're still seeing some inequality amongst the jobs. And I think until we get a handle on the job situation, there's not going to be a taper.
And that explains why you see the CME watches projections basically not budging, because that's not something that can be fixed in a flash bang situation. That's going to take that's going to take a sustained amount of time to fix. It can't just happen at once. There can't be some bill signed that fixes everything.
Yeah, agreed. I mean, I think it's going to be. I think we saw the big moves for jobs in Feb and March, and it's slowing down a little bit in April. I think we're going to start to see a little bit gradually now and over time as comfortability takes place and things start to return to normal, which they seem to be doing rapidly. At some point, hopefully we reach an equilibrium. And, traders are traders. So at some point we're going to see some moves and what people are expecting for rates. But it would seem as of right now, it's like, late 2022 or early 2023.
Right. You talk about being on Twitter a ton. I keep waiting for the Brooks Koepka, Bryson DeChambeau meme to pop up with the Fed.
I love that one, by the way.
Yeah. I keep waiting. Someone has to do it. If no one's going to do it, it might as well be you or me, because it is begging. The Fed's inflation stuff is begging for the Brooks meme. But I do want to pivot at least a little bit, slightly. I still want to talk volatility, but we talked a lot about how it pertains to the SPX back in September. And then we've had the most recent spikes in volatility a couple of weeks ago. How can retail options traders take advantage of these spikes?
Well, yes, I mentioned, we're largely premium sellers at Tasty. So, honestly, the ebb and flow of volatility this year has been good. Last year, VIX was persistently stuck in the 30s after coming off, those crazy highs of 70 and 80 plus, right?
Yes. And
that makes a hard trading environment. Especially after that recency bias of going to 70, everybody was expecting another big move to 50, 60 or something like that. Mm-hmm. And then we had the election, of course, too. There was just volatility was persistently high. This year, we've seen volatility, or I should say just the VIX, for example, at 30, and we've seen it as low as 14, 15, all within the first 5 months of the year. So for me, I'd say that makes a great trading environment, allows people to sell some volatility, and allows you to close out, some trades if they work or not and move on to the next thing, because vol is not so expansive that you can't, reach across bid-ask spreads for options. So I think that's been pretty decent, but you have to exercise some caution for this year because we got some new beasts out there, Patrick. I'm sure you heard of them, and a lot of them are sometimes they're just, letters like NFTs and SPACs, right? Those are some interesting new beasts that are affecting volatility in interesting ways. And
hang on, let me go get some Excedrin for the migraine that those words cause me right now.
Yeah, it's nuts. Those who knows who's going to be the first company a public company to incorporate NFTs into their balance sheet or something somehow. But when they do, you can imagine that's going to affect volatility because nobody knows how to value it yet. SPACs, I keep saying you don't necessarily know the difference between once they go public. It's hard to tell if a company was an SPAC that went public or not because of the chart doesn't fundamentally change a whole lot, right? Mm-hmm. So it's hard to tell. Of course, we have the meme stocks, which are actually going pretty nuts today. And of course, I'm talking about GME, GameStop. We're talking about AMC. Another one I look at that doesn't have options is cost. But there's a whole bunch of them. We know the list. So, talking about meme stocks, NFTs, SPACs. Fundamentally, we've seen volatility change a good bit. And if you don't think they've affected volatility, just line up a GME chart with VIX on the same chart and look back at February, March, and you'll see they were moving in tandem. Yep. So it's crazy. And then not to mention cryptos. That's a big craze right now. So how does volatility, how does that factor into volatility, particularly when you're talking about one of the largest companies by market cap in the S&P 500 and Tesla that's intertwined with Bitcoin, right? So These are interesting times. Yeah,
I think in September was Bitcoin was there, it was lurking, but the explosion in the past 6 months, like you said, I think it coincides with a lot of the volatility we've been seeing. I don't know how to put a finger on it. Is there some kind of like credo or something that you can offer to a retail trader that looks all this and is just somewhat overwhelmed by everything that they're seeing?
Well, I think back to, across my career, I think back to times where we had, things that seemed, I mean, this is interesting because these things are so like brand new, realistically, like within the last couple of years. I mean, NFTs are really fairly new. SPACs have been around for a long time, or at least the idea of SPACs, but the amount of SPACs that were brought to the market in the first 3 months of the year was insane. Obviously Bitcoin has been around. I would say as far as from the trading standpoint, it's been a huge thing for the past, 4 years or so. So it's not quite so much new, but I think back to a time where, certain sectors were just sort of really captivating the market. When I think about rare earth metals, I remember that was a big deal in like 2010. And those names, any name that was connected to rare earth metals were trading at really high multiples, really high valuations. The options markets were, absolutely nuts. And I guess my point is we'll see these type of, things every now and again. This does seem to be, I really don't know where this one's going to go because these are more than just stocks. They're integrated into the fabric of our culture. I mean, when you see, something like Saturday Night Live have skits on NFTs and cryptos, that's telling you something. So I don't know exactly what it's telling you, but it's telling you something.
Yeah, to me, and I don't want anyone to take this as advice, but that just seems like it's jumped the shark. If, SNL is making jokes about it. If, like you said, it's become ingrained in the fabric of our culture, shouldn't that give some people some pause?
Yeah, I think so to some degree. I think you have to exercise some caution. And so, in general, when we're, at Tasty, we aim to be product indifferent, right? Like and what I mean by that is, Boeing is, for example, say Boeing is making a ton of new planes and I'm interested in Boeing because of that. That's not necessarily a Tasty type of deal. The idea is, I'm looking at Boeing and their IV rank is relatively high compared to the past year. So I'm interested in selling an Iron Condor. That's more of the Tasty way. So we try to be product indifferent. We don't necessarily focus on the big stories and the narratives. I still pay attention to them because I just like to. That's just my training. But I guess it helps to have that type of training and helps to pay attention to something and maybe give an idea of what you just said. Maybe something's jumped the shark. So I don't want to go full tilt into, a new asset class in investing. I want to be a little more careful and exercise a little bit more caution. I think that's the real key there.
Yeah, very well said. And over at Schaeffer's, our expectational analysis is contrarian based. So that's why I see all this euphoria and all this infatuation with these things, and you wonder, like, okay, how much contrarianism can you apply to this while still taking a flyer on it?
Yeah.
And I think that's kind of the tightrope that retail investors have to balance.
Yeah, I would agree. And you have to, eye something up, but like use the correct strategy. And if it doesn't fit, then, don't force it. I mean, to get away from these big things, NFTs and all this type of stuff craze for a second, to give an example, Biogen, ticker BIIB, currently right now, if you look at it, volatility is sky high. And I looked at that yesterday, looked at the options market, volatility is trading like 110, which is pretty elevated from the normal like 60 vol or something like that. I mean, it is a biotech, but something is coming out. And just because the volatility is high, probably not necessarily a sell, because from what I saw, there is some type of news on an Alzheimer's drug they got coming out in June. I think June 7th. If you look at the volatility, you can tell the weekly June 11 options are sky high, and all the stuff after that is the options are pretty high. And so just because it's high doesn't necessarily mean you sell. You still have to exercise caution, and I think that's the kind of caution you have to exercise with these new asset classes. You gotta be a little careful.
Right. Very well said, and that's Tasty putting in the sweat equity and putting the numbers behind all of the fads that you see, and I think that is so important and does get lost a lot of times in the narrative.
Yeah, I mean, we have that same type of contrarianism as you guys over at Schaeffer's, but like you said, we there's times where you exercise caution. There's times to be smart. Just like I said earlier, I mean, when we look at the situations when the VIX is between 15 and 20, we only want to be 30% in. If the VIX goes to 40, then you're the odds are better on your side. The volatility is going to mean revert. So we definitely think that way.
Mm-hmm. Well, to start to wrap up here, I always want to hear what you guys have going on. So what's new and exciting over at Tasty that you guys are working on?
Oh, dude, what aren't we working on? This is the better question. I mean, there's so much stuff going on. I only know very little. I've had contact mostly electronically through and a few people in person. Well, first of all, we're finishing up a combination with IG Group, which was big news back in January. IG Group is based in the UK, and IG is acquiring Tastytrade. And so the aim is to take Tastytrade global. The CEO team, people way above my pay grade, had some great talks with IG Group, and we found a combination. So IG is acquiring Tasty. So that's going to be awesome. I mean, I don't know if people across the pond want to see this face, but they better get ready. I mean, they'd probably rather see, some of the other cool people on our show, the Liz and Jenny's and Nikki Batista and Mike Butler and Katie McGarrigle and my buddies, Pete Molmat and Frank Caberner. I mean, those are some, the great people that do some of the programming. I mean, Dr. Jim. So we got some great people. So that's going to be awesome to take this kind of thing global. But I also understand we might be moving to 12 hours of content per day on the Tasty Network. So that'll be awesome.
Damn.
Yeah. I think we're going to be up in the ante. So that'll be cool. We also, we also have a couple of sister companies. I'm not sure if you're aware, but, Tasty's got this cool little conglomerate of companies and some startups, man. So like some of our sister companies are Tastyworks, which is a brokerage. So again, Tastytrade is the financial network. Tastyworks is the brokerage where people can execute a lot of these ideas and things that they see, via the network. One of the cool things about Tastyworks brokerage, the app, and the desktop platform, they have this thing called the trader page. Now, you've never seen anything like this. The trader page shows you the trades that the on-air personalities execute day in and day out, when they trade. And they give you reasons for why they do their trades. I mean, if that's not cool, I don't know what is, my man. And I think, from what I understand, I think we're getting a patent for that trader pages. There's nothing like that. You never seen anything like that.
That's transparency that is unparalleled.
Absolutely. So, that's on the Tastyworks brokerage platform. There's also another sister company, Doe Incorporated. It's a millennial-focused brokerage. Victor Jones is the CEO of that company, doing some great things over there, and work with them every now and again. They're just a cool, energetic bunch. So that's a great startup they got going on. And then the Small Exchange, which is a retail-focused futures exchange. I mean, Small Exchange is pretty awesome in that you can trade a lot of futures with not these huge margin requirements that you have at other exchanges. So this is pretty awesome that the Small Exchange exists. Again, Tom and Tony and Christy Ross and Linwood Mott, all these smart people just create these cool companies and cool things. And all these companies provide, unique ways for self-directed investors to get their Market Jones on, man. So, for me, myself, currently I'm on helping out on 2 segments. If I'm lucky, I'll be able to work my way up to more. But right now I'm doing one segment in conjunction with the Small Exchange called The Leap from Options to Futures. It's where myself, who's a seasoned options trader, and this is real. I had never traded a futures contract in my own personal account. I've done it on a firm level. I mean, but that's easy. You click and buy, click the button with somebody else's money is a whole lot easier than doing it with your own money. So we came up with this concept for a show, and it's been great. I work with Pete Molmat and Frank Caberna at the Small Exchange. We do a show every Tuesday, Thursday. It's a lot of fun, and I'm great getting to learn. And I just traded my first futures contract 2 weeks ago. Traded a dollar, small futures exchange dollar contract. So that's been cool. And then every Friday, I team up with Tom Sosnoff and Tony Batista to do an options jive segment where, I talk to them and try and challenge them a little bit. I mean, they know it all. They've been in the business for, 40 years, but I try to challenge them every week. So I'm loving being there, and it's a great company.
Yeah, I mean, first of all, you're going to have to send me that link so I can put that in for our listeners to check out, because that sounds incredibly exciting. And as far as the European stuff, hey, I'm a soccer guy. So if you need any help, speaking their language over there, I got you.
No doubt. And as long as we don't create any new super soccer teams, I mean, I think everything should be okay, right?
Yeah, just so
for the most part.
Anytime you're dealing with someone global, just say Super League bad. That's all you have to say in your in like Flynn.
Yeah. I love watching soccer. Great game. I don't necessarily have any dog in the fight. I don't have a team. But if you can convince me with a team, man, I'll ride with you.
No, actually, I don't have a team either. Just be a fan. That's all you need to do, and they'll embrace you for it.
True. I like it.
Well, Jermal, I appreciate you coming on. I mean, it was great chatting with you. What do you say? Every 8 months we do this, maybe even a little less time in between, because your insight is just so valuable, I think, to the retail trader, and especially if they're looking to get into options. Check him out, tastytrade.com. I'll be sure to put up all the links because I gotta support you guys. I love what you're doing over there.
Thanks, Patrick. We really appreciate you. We really appreciate everybody at Schaeffer's. Love, talking to you guys. And yeah, man, probably sooner than 8 months. Let's get this back on wax again at some point soon.
All right. I hear you.